So first of all, thank you, panelists, for giving me this opportunity to have this engaging discussion with you, and a warm welcome to everybody here. I think the topic is very pertinent as she was highlighting that the wealth management as a services is significantly evolving in our market, both in terms of the scale, but more importantly also in terms of the sophistication of the services which are offered to the clients. Over the next half an hour, what we'll try to do is see how we can really understand this market better, because the way this market is defined itself has a lot of nuances to it. So how we can understand this market better? What are the trends which are shaping the product and technology innovation in this market? And more importantly, how do we see this market shaping up, from here onwards, 5 years down the line, 10 years down the line? So uh, starting with that, I think maybe first thing to understand, how do we really define this market? It's very wide. You have on one segment mass affluent categories to HNI, ultra HNI, and then you have family offices, and then you have institutional clients, and most of the providers, have started finding their niche, while there are some providers which are more widespread, but still identifying that niche is important. So understanding this market well, of how do you size this market, how do you define this market, is important. So maybe Seemant, if I can start with you, what's your take on how to really make sense of this market in a broader way?
So, okay. Good evening. Good evening, everyone. I think broadly, if you see the financial assets, and I'm not saying as a whole, only for wealth, and which include maybe from $100,000 plus type of affluent, mass affluent HNI family, this should be around, as per I think Deloitte report only I read, somewhere 1.1 trillion is the overall market in 24, and expected to be 20 by 29, 2.3, $2.5 trillion of financial asset. This does not include, I think, deposit base, because that is also approximately around a three and a half, 2.5 trillion type of $3 trillion term, or maybe on 250 or 260 lakh crore. So it's a scattered market. You are rightly. And while I been a part of wealth industry in my earlier days, I think very important from a perspective of which segment you target, because the nuances and so the family offices, I'll say, let's say 1,000 plus or 1,300 in total, has shaped up from a more of a treasury model. Earlier, it used to be a more of a money of companies treasury, which has now been segregated into a family office side. Then there's a mid market, which is HNI, ultra HNI, and mass affluent. And the fastest growing is, I think, mass affluent and HNI. Family office are growing in a moderate space in that way. No doubt it's a faster than other market, but comparatively, relatively, I think these are the two market which are running pretty fast, and that has been reflected in last 5-10 years of data also. If you see on equity asset or a mutual fund or even a PMS and AIF.
Saugata, you cater to this market, through a very evolved digital platform, and the primary segment that you cater to is mass affluent to affluent. How do you see this? How have you defined your market, to cater to, and from a scale point of view?
Sure. Good afternoon, everyone. So, when we started our journey a few years back, at that time, the AUM to GDP ratio of mutual funds used to be less than 10%. Now it's a little above 20%, which shows that we have grown at a good rate, especially post COVID. However, if we see the global averages, that number is greater than 60%. There are some countries where it is even more than 100%. So, India has a long way to grow, and we think that the financialization of assets will keep continuing for a long time, and there'll be, like, double digit CAGR kind of growth. The segment which caters to only HNIs or ultra HNIs will also grow, but that's a smaller part of the population. The larger 100 million plus population, which are the mass affluent or the emerging mass affluent, who will be joining this bigger pool, they really need hand holding, because what we have seen is that up to a point you can do it yourself, but after a while, when your assets are 50 lakhs, 1 crore and up, and you need some sort of hand holding, especially we have to solve for behavior, more than financial knowledge, anything else. It's behavior and trust which drives financial markets and investments. So for solving for behavior, what is very important is to have a trusted financial advisor or a human advisor. The human advisor can be further using a lot of technology. It could be human led, but AI assisted. That's where we think there will be a lot of growth, especially when we go to tier 2, tier 3 cities. And that will be our focus for the next coming years.
Thanks, Saugata. So if I hear both of you, what you're saying is while the market is fragmented, all segments are growing. You know, the family office segment is equally growing, the HNI, ultra HNI is growing, and mass affluent is growing in a big way. And that is consistent with the India story overall. Jaspreet, if I can come to you, you know, last 5 years or so, we have seen a significant momentum in financialization of assets, and mutual fund has been the biggest, I would say, driver for this. And while other asset classes are also coming up, but mutual fund predominantly drove that financialization. In your view, what really changed in last 5 years? Is it the uh, delivery models really made it simpler for people? Is it product innovation? Is it awareness? What really worked, which led to this? While we have a long distance to cover, but what really worked till now?
Yeah, that's a great question. The way I look at it is it's a confluence of factors which has happened in the last 5 years, from the regulatory landscape, from the technology providers, from innovators, and capital providers. All right, so let me elaborate quickly. So, from regulators' point of view, bodies like RBI or SEBI or AMFI, right? अब मुझे लगता है बच्चे बच्चे के जबान पे है कि म्यूचुअल फंड सही है. अब वो नेक्स्ट लेवल पे जा चुका है कि अब वो इंश्योरेंस एडा इज प्रमोटिंग इंश्योरेंस एज अ दिस थिंग. सो दैट्स अ रेगुलेटरी दिस थिंग. दे हैव डन अ fair bit of work there. Second is in terms of the digital ecosystem, wherein the likes of Jio and even Airtel and so many other service providers have ensured that there is a smartphone. If there is a smartphone, then multiple things can be done over there. Third is around the so-called innovators, wherein the likes of all these from the Paytms and the PhonePe and including Grow and so many other PayPals. They have mushroomed so much that there is activity happening on the phone, on the digital way, the financial this thing. And lastly is obviously the capital, which is abundant capital is available even today, and it's probably even more available because all these private equity guys are taking exit today, and they are hungry for more opportunities. यहाँ पे वो और वो 10 15 20 गुना कर सकते हैं, जो जो 10 15 तो कर लिया, अब और looking hungry for more such opportunities. So I think it's a confluence of all these factors, which is and obviously in between COVID happened, and we were whole of the world was forced to do it from home, from whichever place you were, and probably India was the most advantageous position, और हमने शायद उसका capitalization बहुत अच्छे से कर लिया. And therefore I'm amazed at the I mean, I was just in a forum where Mr. Ajay was there. He was saying कि probably the recent broker got listed is probably at par or higher than the stock exchange market cap itself. So I'm referring to gross market cap and BSE's market cap. So I mean, that's the kind of influence one has, or that's the impact one has in terms of the new age business having on the overall this thing. But just on the other wealth side, I think there is fair amount of wealth both at the top as well as at the bottom. Probably हम थोड़ा top पे ज़्यादा देख लेते हैं, but bottom में let me just give you an highlight. The SIPs which are happening today at the pace at which they are, all these people, because of the culture, the patience, the perseverance that they are showing, they're all gonna be like customers of wealth management 10 years hence. Because उनको तो बचपन से ही बता दिया गया ना कि मतलब आपको सिप करना है, वो even if it's ₹1,000, they are getting ingrained into that culture of doing SIPs, and that's also part of the the mutual fund industry reaching 80 lakh crore. So mutual fund is typically tripling every 5 years, and इस स्पेस पे ही चलते रहे तो फिर वो मतलब 2-3 हजार करोड़ का मार्केट हो सकता है अगले 20-25 सालों में, which is about 80 lakh crore today.
Brilliant. So I think what you're saying is obviously awareness played a key role. But apart from awareness, all other innovations really fell in place, and then COVID did help in, especially in this context, to fast track this. But Rajesh, you observe this globally as well. So for this movement, which I think what Jaspreet was also highlighting, technology also played a key role. How are you seeing it globally? Is technology, is it really unlocking the value for players across the globe? Is it more focused in India right now? How are you looking at this?
Thank you. Thanks for again everyone having me here. I think my esteemed panelists here will attest more to the finance side of the growth here for sure. Like the in terms of AUM growth, I think we are poised for double digit growth in the next 2 3 years. We also seen proliferation of demat accounts, and India, like most emerging markets, you have like these barbell ends, set up where you have these long tail of low end investors, but we also have this fast growing high net worth. But I would focus on the technology. What's definitely happened is it's democratized and open access. The India tech stack of the digital identity, eKYC, the UPI as a settlement layer to make it seamless and efficient, even in tier two cities. And now I think the risk of like repeating what others have already said in other panels, the account aggregator and access to data across and have all reporting across different platforms consolidated in one dashboard and provide that view visibility. So this gives investor confidence in terms of accessing, in terms of retrieving information, in terms of building a credit score. So I think that has certainly played a role, and I've had the honor of participating and building this ecosystem. Apart from that, I think the regulatory clarity, I think as mentioned over here, in the innovation coming and also in emerging asset classes like what Gift City has done in the IFSCA model. Like, I mean, the typical alternative has been let's go to Singapore or Dubai and look for these sort of assets right now. Now you can have onshore those sort of offshore models in foreign denominated assets in more riskier and alternative asset classes. Yes, surely this is still in innovation stage, but I think that's where technology play a key role. Last but not least, I think when we talk about technology, I also agree again with the sentiment shared. They will, collaborate with the human aspect. So the aim is not to necessarily disintermediate the last mile, the human factor, your wealth investment advisor, or your relationship manager, but how you can provide them the tools so you can make it highly hyper personalized for each individual, especially in India where you or other emerging markets where you're going to have people putting up in sachet style of investing. You need to have a lot of this being driven by data and AI to come up with these outcomes and have forecasting based on different scenarios for each risk appetite of the investor. So I think that's where technology acts as a great leverage.
So, Seaman, the conclusion is that everything all came together, but which made us here, which took us here. But what will it take from here on? Because technology has played its role, at least till now, to really make digital platforms more accessible. But still, the penetration overall, when you compare it with the developed economy, is lower, and we want it to be much higher. So now, to take it to a next leap, which is where you reach, far beyond tier two, tier three cities, and get that to the next level, what will it take?
I think there's a good data point now, as Jesse has said, that sachetization of shampoo has changed Procter and Gamble and the Hindustan Lever. Globally, the larger the bottle is, the cheaper. India has done the same with SIP also. It's a very unique thing. Just to give you some data from mutual fund industry, 49% of folios now, out of 25.5 crore, let's say, 25 crore mein se, 49% is coming out of B30, which is beyond 30. So category of top 30 and below top 30 has been there. Certainly AUM is, let's say, 20%, but you have to understand that the larger cities have got corporate money and all those things. So that also contribute to little bit to that lopsidedness. Interestingly, the data of deposit and CASA, if you take out, and especially if you take out the Sarkari money, which is primarily with the capital cities, saving bank money is more coming from B30 cities. It is as per Deloitte report only. And 38 is from top 30, the main one, and 62% coming out of those side of smaller town. I think the resistance of onboarding and jam trinity in this country, and the ecosystem which has been created by various platform, asset management company, even regulator push for MF central type of thing, has reduced the onboarding, KYC, And that has led to a lot of, just to give you one another data point, Dream 11 had 62% non-metro clients. So there's a misnomer that it's not catching up. I personally feel, and whatever I have my interaction, the people who are at a higher age, which are digital not native, they still have apprehension of behavioral cognition. But the new Gen Z are coming big time into mutual fund. So I think if you just see the data in a raw form, you get a lot of insight. Certainly on a wealth, mutual fund is one product. Other than that, I think AIF PMS are also getting decent traction. The large wealth outfit, primarily private wealth outfit, have started opening shops in the cities like Baroda, Indore, Jaipur, and Coimbatore. Earlier, it was more of a suitcase banking. That's a very normal thing that somebody is traveling from Delhi to Jaipur, or let's say Surat from Ahmedabad or Bombay. So that has changed now. So that shows clearly that these cities are growing pretty fast.
Got it. So I think what you're saying is the momentum is already there. If we just go the way we are going, we will reach there. Obviously, furthermore innovation will help fast track it. But Sandeep, you are your provider of services to many of these wealth providers, which Srimant was saying now they are emerging everywhere. As you look at them, how are their needs and demands are evolving, which you are looking at both? And he pointed out that not only mutual fund, but across AIFs, other asset classes. So their needs and demands are constantly evolving. How are you seeing this market? How they are shaping up?
Thanks. I think Seemant used Deloitte data points so that you don't argue with him on the numbers. That's a smart move. But I think initially the way you kind of identify the target segment, the affluent investors, the HNIs, probably India is such a large market. You can't call it a pyramid. It's basically each box has a huge volume. You talk of retail investor, you talk of ultra HNI. I think the number of investors or the market that we are talking is huge. Second, I think the way it's growing in each segment is also because of the regulatory maturity. I think because I also come from a GIFT City background for last 10 years, I've seen how the regulatory landscape evolved in GIFT City. 5 years back, we were only discussing on plain EAP structures, where how do we allow a category 2 or category 3 funds to operate there. But when we today discuss with the fund managers there, I think everybody is talking of a very innovative products. Today, I think when we also talk to the foreign investors, they are not asking for a normal long only or a long short fund, but probably they are also asking for, can you create a multi-asset product for us? Can you create a portfolio where there is some India investments and there is some diversified investments globally? And I think with this regulatory maturity, with the technology platforms which are now coming up, it's creating one trust and the transparency in the entire ecosystem. And that's where we see that the role of now technology is also going to be very important role, is going to play very important role to kind of create that market. And I've recently taken a new role at Eton Solution, which is largely into the family offices side. uh, we already have 900 plus families on the platform today, coming from the US. India just entered basically, and a catamaran kind of families have actually come on board today. That space, we are also seeing a great growth happening basically. I think because more and more families, as you rightly mentioned in the beginning, someone that they are now actually becoming a more formal investment offices rather than only one of their existing verticals. And they are actually looking at diversifying their investments not only into the securities or the commodity as a product, but they are actually looking at a multi-asset. And that is where I think innovation is going to again play a very important role, and the manufacturers will have to ensure that they are actually now creating more innovative products which the investors are looking for.
Well, thanks, Sandeep. Rajesh, you also look at institutional clients, and I mean, you have a very innovative product to help them, organize their overall assets from a custody operations or an infrastructure, technology infrastructure point of view. And you're observing this globally from a regulatory landscape point of view. What's your view how things have evolved for institutional clients, how their needs are changing, and how do you see, particularly in Indian regulatory framework, how that is evolving?
Sure, thank you. So a lot of our focus has been on institutional adoption, and if you see that globally, the regulatory regime has been conducive to promote that sort of expansion. So when we talk about diversification into digital assets. That's where I'm focused on. Like you have broadly different, you have the central bank issued tokens, you have the stable coins, and you have the public crypto, the various, right? So when we talk about institutional adoption and the readiness, a lot of that is, for instance, the first is let's solve for cross-border, and that is again emerging from the corporate and transaction banking that they are used to, where their corporates in very, say, heavy export driven or hugely vulnerable to foreign FX changes, where their corporates are demanding, I need more efficient rails. So that forces a lot of these banks, financial service providers, and PSPs to look at building these rails, and they typically start with the infrastructure and building the operational compliance also overlay on top of that to meet their existing risk compliance framework. The second, again, they are looking at, I think we spoke about tokenization in Gift City and others. I mean, real estate and bonds are two very specific asset classes we have seen being prioritized by traditional custodians who have acted as a trustee with fiduciary responsibility to preserve that collateral. How can we look at, whether it's for fractionalizing, opening access, or making, even like when it comes to settlement and also secondary markets and liquidity. For instance, if you pull out of the traditional instruments, rates and stuff, I mean, in terms of you receiving it back and for it to be settled can take weeks today for them to calculate all this NAV, and it's all within their silos how they calculate, but now you bring it to a ledger, whether it is some sort of a public or semi permission with a privacy friendly layer. Then again, how you can tokenize these instruments, like UAE is very big, and I think that may be the first big use case in India, but also a huge inbound remittance. And if the banks are looking and serving these segment, then they need to look at, again, bringing it to the public blockchain and the ledger. How do we bring these assets? I think the real friction when it comes to India is the regulatory requirement when it comes to the classification of what is the settlement mechanism. If it is going to be a privately issued coin, especially a foreign denominated, which is, we all know US dollar denominated stable coins dominate most of the digital assets, then the government does have issues on how it can impact the monetary policies and control. So maybe a hybrid form of what the government, at least in India, have come as, let's start looking at whether it's a CBDC or a tokenized deposits, a sort of a central bank or a commercial bank issued token to be used as a settlement for these sort of tokenized assets.
Okay, so I think what you're referring to is tokenization, and obviously the digital end-to-end digitization of the services will help it. But there is no discussion today can be completed without AI's intervention, and which is where we bring pertinent. Sougata, we were chatting just before this panel. There's a lot of promise that AI will change the way we are doing things across the board, be it in banking services, be it any services, and wealth management services will be part of it. What are you seeing as the early examples of AI really giving that benefit to the providers, which can really create better experience for the customers?
Right. So we have been doing a number of experiments with AI, and the results are good, and we think it's quite promising. And in the next 2 to 3 years, there will be more applications of AI agents. So when we see the different customer touch points and the data that we get, for example, people are coming to a chatbot and they are asking different questions. They are sending support tickets, and there some data is getting collected. They are interacting on a different screens in a mobile app. Again, you can collect different data points. Now sometimes we can understand unmet needs of a user. For example, if somebody is asking about gold funds in a chatbot, and we also see that that person doesn't have allocation to gold, and probably it's a suitable allocation for that person, we can nudge that user to add a SIP in a gold fund. Now comes from an unmet need which the AI analyzes, and then the nudge is personalized. So it's hyper personalization which is possible based on data. Also, we have found that there are certain projects which may not really lead to a tangible result. So a AI project which either reduces our costs or increases the customer's trust and has a tangible business impact, those are the projects that we want to continue. With regards to that, we have seen obviously low hanging fruit is a chatbot which solves 80-90% of the queries, and it's really good. On the other side, we are also seeing operational work, especially things like support tickets and all, which comes on a regular basis, where certain flows are fully automated and certain flows have a human in the loop, where the AI does the first response, the human just presses a OK button so that a wrong answer doesn't go. And that also is reducing a lot of time and cost related to customer support. And on the portfolio analytics, there is a lot of scope for AI, because now we can see the portfolio data, we can see their transaction data, we can understand their tax status, if somebody is an NRI, etc. There could be complications based on all these parameters, and the market data, where the equity market valuations are, what kind of instruments are suitable at this point in time. We can create really personalized portfolios at a high scale without too much of manual work. And these applications of AI will have practical and tangible results, and we'll be implementing them. We are already doing it, and we'll keep implementing them.
So I've heard two things. Broadly, one, you're saying the entire customer support and service becomes a lot more seamless and simpler and automated, reduce the friction, and B, personalization, which you will be able to offer in an enhanced way using AI. But Seemant, as a manufacturer, how are you seeing AI shaping up from a fund management perspective, from creation of product, innovation in product? Are any experimentation happening on those fronts?
So, from a first I'll touch maybe on a well side. I personally feel, and there is a saying that every bubble has created a sustainable uh, industry after a bust. So that has been with internet, Google, and everything. This might happen with AI also. I think human touch will remain same. If you cut Ultra HNI family office, I think that would be human driven primarily, because they have all tools and resource to keep that. The mid market and retail, where there is a more of a commoditization of portfolios, all those things will definitely move on a hybrid or maybe digital. So AI will play a very important role. Having said that, certain aspect of wealth business, which like rightly said by Sougata, that the tax implication, border transaction, regulatory thing, risk portfolio churning, simulation model, servicing module, which are standard, will move on to AI. But I think there's a good success of Morgan Stanley, what best action. So they have got the success on a productivity of each RM, where entire system drive all the data point and everything, and then offer the real RM deliverable options. So when there is a pure workflow, AI can be a greatest tool on a scale side. But when there is a workflow with a ambiguity or a grayness, I think human will be required with a lot of data. So productivity and efficiency will go up. Coming on to your question on asset management side, I think right now it's some part which we usually call as a quant model of decision making was done, like doing a 5,000 company research and everything that can be taken care of. So far, few products which are more on a portfolio led on small case and other thing people are trying, but I have not found right now that entire ecosystem from 0 to 100 has been moved on. Good time to see. I'm sure innovation in terms of as somebody said, that multi-asset, national or cross-border product offering. With that innovation, AI should play an important role.
Understood. So you're also in a way saying that the whole customer servicing and customer experience part will significantly change, but yet to travel a distance from a manufacturing point of view and fund management point of view. Sandeep, as a provider, obviously you must be using AI a lot in building your own products and solutions and embedding AI into your solutions to support that. How are you seeing that shaping up?
I think what we realized that while we created a fantastic tech platform for, say, a family office managing 10,000 crore investments into multi-country, multi-currency with complexities in a very high nature. Eventually, I think we came up with a new product called Etone AI. Now it's a very well secured product within the personalized portfolio, where a family can actually ask a question: which investment is doing well, which fund is not performing well? Which country has given me higher return? 5 years back, what was my diversification of the portfolio? I think earlier it was very difficult to crunch those numbers data in a multi-asset, multi-family kind of a investment. AI is now trying to provide those information in click of a button, which is improving their efficiency in terms of deciding their next investments or a next product. So probably I strongly believe that the way India is showing their strength in the fintech space because of the landing innovations and the innovations happen in the payment space, UPI space. I think the next phase of the growth for fintech in India will come through wealth tech. And that's where I think I see more and more AMCs, all the manufacturing moving towards the tech basically, which where the entire wealth industry will kind of transform through the right kind of technologies.
Thank you, Sandeep. And I think while I can keep going on and on with this kind of a panel to keep, having this conversation, but I can see that red and time's up in a big way. But I think it was really engaging. Got a lot of insights from all of you. So thank you so much for your time, and I hope it was definitely enriching for the audience at large. Thank you.
Thank you.